All right, so here's the SpongeBob is I want to answer his question. So honestly, um, I think everybody's trying to make money trading, so maybe I can help somehow. Now this is it's trading's complicated because it's psychological, and people don't want to lose, so they want to know how do you get in these. What's the best way to get in, right? Um, so he says, I thought I deleted my comment in time, but I guess not. Not that I'll get any answers, anyways. Well, I'll try to answer you again. I don't even know what you're asking, but I think you're trying to ask me here. But we'll get to hear some creative insults, so that'd be fun. Yeah, that's my forte. Okay, you're still pointing out the perfect place to buy. I'm not. I never said perfect, and I think that you may be a perfectionist. See, I'm trying to read into, since I haven't talked to you in the flesh, so I got to read into what I think you're pointing at, or what your view of how to make money in the markets. So, um, you're picking out the perfect place to buy with no evidence why it's perfect, and he keeps on saying perfect. I mean, I think that he's got an issue without knowing that it goes up after that. Okay, right there is so much. He just said so much right there. They fucking the highlights in here. He said so much right there. Why is that so much? Because let me see if I can break it down. He's asking two things. Why is it the perfect entry? And how do you know? Well, that presupposes it's going to go up, or it wouldn't be the perfect entry. So he really is. He said perfect twice, and how do you know it goes after that? Without knowing the future. In other words, well, dude, nobody knows. Okay. But what I can tell you is if you're buying below, you're either gonna watch the market and you pull the trigger and buy. As it drops, it'll be lower than 10 minutes ago, right? Since we don't know the future, and the future is constantly unfolding in front of us. So, how do you know what goes up after that? Not to mention that, let me just add to, I would, what you should be really asking me is, why would you get in there? And how much is it going to go up? Even if it does go up, and you're missing one critical element to this whole thing. I talk about this ad nauseum. How fucking big are you in the trade? Dude, if you're in a 1K with 100 pips stop, you're risking $10. So if you call that getting creamed, as you say, how big are you trading? What time frame are you on? How many trades do you do a day? Do you have all day to watch the market? Okay, I was referring in that video to people who have day jobs. Okay, you can put on trades, come home and have money in your account, or get stopped out. And what do you consider a loss? So, did you place buys on the price drop before that one, 6 bars before the perfect one? If so, why? Because it's support. Okay, it's like this. Now, this is going to sound really terrible. If not, how did you know not to? Okay, this is all about. Imagine I knew the future. Or I just happened to put an order in it, and just luckily the market unfolded in a way that supported my strategy, or my tactics, that I had a buy limit down there. So if I had the right stop and the right take profit, I could also have, say I have a 20 pip stop and my target's 30. It goes up. I'm not here to get out of the trade. I'm usually asking more questions than that. I could even make it. I could make a bigger question. And this happens all the time. You buy it, you got your stop in. It's a dead cat bounce or something. There was 18 pips of profit. You didn't get out. You'll have one ticket in the market, and they stop you out. You were up on the trade. You were right about the entry. It was a perfect entry. But what you should be asking me is, do you have a perfect exit for your perfect entry? Okay, it's beyond It's beyond that, because this is why you need 5 tickets, because you need an order with a 15 pip stop to make 8, and you need one with a 20 to make 18, and a 25 to make 50. So when they blow you out of the 50, the big, in other words, you've got to make something. So talk about this concept or this approach. You find a high value area, support, where the market's bounced off it before. So apparently buyers are coming in there, and that chart specifically, there's a triple bottom there. So that ought to clue you that you don't need Fibonacci, you don't need stochastics, you don't need Renko charts, you don't need point and figure. You just know the price level, and you look left. Or you just say, you know what? Don't even look left. Here's one. This will blow your mind. My scripts are timed. If I put a 15-minute order in 10 pips deep, and I put it, when I say 15, it's going to expire. The scripts are in the link. I'll put them in the link of this video. The scripts are in there. They're called time grids. So or time orders. If I put an order in 80 pips deep for 8 hours and 140 pips deep for 4 hours, I'm expecting the market to drop at a rate of 10 pips a minute, right? Or 10 pips an hour. 10 pips an hour, right? And it's 24 hours in a day. There's so many ways to buy low, but if you're a buyer, the best price is below you, not above you. Buying on a stop above you or buying at the market, if you buy at the market, I guarantee you, you will be underwater on that trade at least by 1 pip. I don't know anybody that's buying at the market and the market doesn't pull back a half a pip. So there is no such thing as a winning trade, because every trade you put on is a losing trade. You're down the spread or the commissions. The moment you pull the trigger, you're down. Okay, every trade starts off as a loser. So you're saying 6 bars before a perfect one. If so, why? If not, how did you know not to? Well, how you know not to is some of that comes from the fact that if the order lasts for 2 hours and 3, and you can have 1, 2, 3, 4 hour orders, or 6 or 8 and 12, that order is going to delete itself, because if it's 40 pips deep and it lasts for 4 hours, it's not meeting your criteria for momentum entry. Your auction, you're setting up a 4-hour auction to buy, like you're going on eBay, and you're going to put a bunch of items on eBay, and you have a 4-hour auction, a 2-hour auction, a 3-day auction. Now the 3-day auction may be some big ticket item or something, but you're testing the market. When you sell stuff on eBay, and it is an auction market, I'm sorry to tell people, what you're looking at in Forex is over-the-counter trading. There's no regulation. There's no price. Stock markets are regulated in price, and commodities have limits. Soybeans can't move more than 15 cents up and 15 cents down per day, unless the exchange widens the limits. There is no limit in Forex. Any currency can go off the rails. Look at the Swiss franc. Any currency can do anything it wants anytime. It's almost, they call it a Forex exchange because it's just an exchange. Now, granted, people have decided to put moving averages on the price exchange histories, the history of exchanging prices certain times a day for certain amounts of time, and all that, blah, blah, blah. And if you watch the news come out, you see a market spike up, spike down, and end up unchanged with a doji, a big pin bar doji. And what that means is that you should have put buy limits and sell limits above the market and traded it both ways towards the middle. And most people aren't going to do that, but it works. That's a winning trade. But most people aren't going to do that. Why? How do I know it's going to be a perfect trade? Well, you don't. That's why you got to trade you got to trade for like 2 years. You got to do like maybe 1,000 trades. And you start to think the fear is going to evaporate. So what you're addressing is fear. How do I know? So all the, you got to get all the elements here, but you actually should be asking stuff like, how big do I get in? How wide is my stop? What's my ratio? And should I put in a scalp? So if you build a scalp into the, when I set on the chart, perfect entry, you could put 5 scalps in there, 3 swings, and a partridge, with a dick tree. So you could put anything you want in there. It's the ultimate creative expression trading. I really do not believe that if you are trading a setup, I've traded many setups that fail. I guess I quit doing that because it said, well, look at, got confluence, we're touching this line, stochastic says this, Fibonacci says that, Bloomberg says this, and I got a guy that works at the bank. If you didn't get the stop, the size, and the take profit right, that's not a winning trade. And if you're going to bank on that one trade, you're just a fool, I think. If you're a professional trader, I just don't even think, well, for me, it just doesn't make sense because I know there's a better way. And that's to distribute your risk. It's to be diversification in size. And some are going to have bad ratios, but you need to scalp something just to participate in the market because there's no way in hell it's going to come to this perfect entry, never hit your come in within 3 pips of your stop, and go up to your target. You never spoke about getting out of this trade, which I think is funny because you don't make money till you get the fuck out. You could be up in the trade $1,000. If you do not get out, it could come back and stop you out and lose 500. So that happens. I've done it. It happens. This is why when it's going up, you can't get too excited because you got to realize you're coming into the seller's window. And the same thing when it's going down and you sold it and it's running out of gas and momentum, it's like, you know what? Your Fibonacci fantasy target's never going to get hit, dude. And that's when you stop using Fibonacci too. I'm just talking about people that would trade for a living, or they want to trade and win a lot. High percentage wins. They don't live in a mystic. If you can show me a Gartley pattern or a Fibonacci that works, please post that video. Please show me where 618 is the entry on any chart. Please show it to me because you know what it's going to say? I guarantee you 618 is not the entry. It's around there somewhere. Of course, people are going to say, yeah, I mean, it just gives me kind of an area. Well, then it means you got to put multiple tickets in. Are you going to err on the side of caution and put it just below 618? Oh, that's a better price. It's a buy low, sell high game. So then you say, if you are using stops all the way down, and I think you mean protecting my entry with stops, trying to get long, when and if it turns, you're going to get creamed. I think you mean if it doesn't turn around. The problem comes when you are actually trading live. Okay, well, I don't know what you mean by live, but you mean a live account or the market's open. You place the pendings and walk away. Nothing you do is going to change the structure of the market. What I'm really talking about in that video is trading structure. In other words, when I say structure, vertical price structure or depth of market. Now, these depth of market people are looking at prices. This is, market profile theory or market profile view, where you turn the market sideways and look down it and compress all the data so you see the bulges where the most amount of trading takes place, and the wicks are really the least amount of trading. That's unfair value. So if you want to err on the side of caution, you buy where I said in the video, and you have buy limits of low. So when you get creamed, you're not getting creamed. Okay. Now you're afraid of losing. So what you're saying is you want a perfect entry and you're afraid of losing. It's not good for a trader to think like this because you have to accept the losses up front. But when you place the pending orders in there and you say, I'm putting a 12-hour order in 100 pips deep, you're also challenging the market. Come get me, right? So I'm a brinksmanship guy. And so I like to play the game of come and get me, bitch. I got my limits down here. Come on, bring it. Now I have a 35 pip stop. I have a 10 pip stop. I have a 68 pip stop. I have a 21 pip stop, 14 pip stop. I add up all the stops. I figure out the total risk of the whole scheme, and I let it go. Now, granted, if I'm watching it live, so to speak, and I see it come down and I see they're not going to fill my super deep order, then I'll come in and buy one at the market or two at the market. And then I'll wait another hour or another 15 minutes or another 5 minutes or another 4 hours, and I'll buy again. So, and if I see that it's a dead cat bounce, and I'm like, this is not the bottom. Now, when the market's open, it's okay to bail on the trade. It's all actually also in the link. I'm going to put all the scripts, which is there's a close, all open, and pendings, which it's under a directory called trades, I think. And you might just cash out because you're like, I did this in the video I did live 2 streams ago where I traded and made $170 with scripts, trading just like that, discussing the after the euro dollar went screaming up and it bobbed around, and of course, don't forget it went up and trimmed the trees on the treetops of the 4-hour chart, and then slammed down 80 fucking pips. It just 3 hour, like 8 hours, 12 hours straight down 80 pips on Friday. Then at 11 o'clock on Friday, it goes up 60 pips in a half a fucking hour. Okay. I bought that, right? So I made 60 pips and I had buy limits in there, and I got stopped out of a couple tickets, or 20% of my position. But I'm a trader, so I trade. I don't care if they stop me out, because if it still looks good in an hour from now, and it goes deeper, I'm going to buy more. So you have to have this perfect entry thing, this optimal trade entry, is just completely insane. Because what if the market keeps dropping? Okay, let them stop you out. They stopped you out. Okay, you're down $100 or 300 or 3,000. You have to have dry powder. So, so the problem comes when you're actually trading live. You don't know where the lows are going to happen. Yeah, I do. They're going to happen lower than we are now. In other words, I don't have to know where the lows are going to happen. I can estimate that the lows will be, this sounds really stupid, and you're going to say, well, that's stupid. Trading's so simple that it just goes past people. Like when you open the refrigerator and you're looking for the mustard and you can't find it, it's right in front of you. Because you think, where's the fucking mustard? Damn it. Oh, it's right in front of me. The market's right in front of you. The best price to buy is below you. If you listen to Mark Douglas talk about how to get in the market, if you're going to buy because it's going up, you're chasing, unless of moving up so quickly that, okay, you better get on that train, because now it's filling a vacuum above you. And what if this is another problem. What if it doesn't drop? And now you're not in the market. Do you buy at the market and go, fuck, they're not? The best trading you can possibly do is you have your limits down there. You have a planned trade, a planned entry. Maybe you use Fibonacci, but you can't put Fibonacci at 618 one ticket. You got to put one at 618, 619, 620, right? Every 3 pips, maybe. Whatever that is. I don't know how much money you have or how much work you want. The more work you do, the less risk you take, right? This is just a known fact of life. If you have a backup plan, you're less risky. If you put all your eggs in one basket, this is an old saying. What if you have one egg in each basket and you got 20 baskets? You drop two, okay? You got 18 baskets left. But when you put all your, but this is, I think, what you think you're doing. Most people are thinking like this. So anyone can draw a line on a chart. So you say, anyone can draw a line on a chart pointing out the last low and say, this is where you buy. Well, no shit. Well, I don't want to break your heart, dude, but that's what you do. That's what trading is. Okay, there's no secret. There's no magic Gartley. The sad, okay, I just posted my dump. There's no. The sad thing is there is no Holy Grail. And let me see if I can explain it to you on this chart here. Now we'll look at a live chart of a couple charts here of the euro dollar and yen and stuff like that. Now look at this one-day pullback on the yen. Now this, if you were trading this market and you wanted to sell high and buy low, where do you think, just thinking stupidly, where do you think a good place to buy on this chart would be? Maybe you buy at 1K at the market or 40K at the market, Sunday night when it opens. And what's the next thing you do? You put a buy limit here or a pack of buy limits here that lasts 8 hours. Put a pack of buy limits here that lasts 12 hours. And a 24-hour script right here that lasts all day, 24 hours. And why there? Well, let's also get some exits going. So your exit's going to be for these tickets, for all these tickets, your exit has to be here. Why? Because if tops become bottoms, and they do, and there's a psychological reason for that, because the people that bought here, and when it goes down, if they bought here and it goes down and it comes back up and they realize how fucking wrong they are, they get out. Plus, it's just the way the market behaves. Tops become bottoms, support becomes resistance. It becomes a pivot. It's not to say this couldn't engulf, and you would say, so exiting is just as important. The perfect exit is as important as the perfect entry. Now, some of this is, now this is the daily chart. Well, now if I put a buy limit down here that lasts all week, yeah, maybe by the end of the week you'd be bouncing off this. But trading is so stupid that it just goes past people. Now, on this chart here, if you're buying stop hunts, you're going to put your buy limit start right here. This is the way you would do it. Right? So your sell limits are here, just like here. Now, if you say that you're going to get creamed, and what if I sold on this new high, because I want to sell high, buy low, and I know that this is a really great high price. If I look right at, so I have a sell here, and I have a sell here, and I have a sell here, and a sell here. Now, I'm going to get creamed on this one, but not if I've got a 200 pip stop. So the question I'm going to ask you is, how much money are you trying to make? This is the question. Not how many pips you're trying to make. How much money are you trying to make? Okay. I have a trade. I could show you a trade. I could show you, I can place all the orders next week on the demo. So this is demo I'll be running. I can put a buy limit here at the good old-fashioned round number. And this is where all the stops are stacked up. If you look at the wicks there, yeah, this is what I'm going to do next week. I got a buy limit here on the 20s. And the reason why I picked the 20s is because I can do the math. Now, I could buy a 1K here. And if I make them all 1Ks, it's more work, but I've got scripts I can drop and I can just come in here, or I can press a button that puts an array in. I have a button that I can press that'll dump 20 tickets in here all the way down here, and they last for 8 hours. Okay, now that's just the entry. I'm not even talking about the exit yet. Don't forget, you got to get out to make money. So what if coming into, and I'll do it live. No, do it live. So I'll do it live, and this is just, it's all about the hard work of putting in all these orders. And of course, what's the exit going to be? Well, if I write the script, I have a script called Bigfoot. I call it Bigfoot because it gets in super deep. Now, what if this ticket lasts for 8 hours and when I press a button, but what's the cash out for this one? And maybe I design a master stop on the whole array, so I have a stop here. Well, what that means is the very top ticket needs to be a small ticket, because if I'm going to put a stop, and you can write that script, I could write that script. I could write that script in about 5 minutes, because I've already got the 10 minutes. Write that in 10 minutes, press a button, and I can have that and drop it on every currency, all 4 currencies, and walk away. Now, it may not make sense to drop it on a currency that I don't think is going to drop in 8 hours. It's going to drop 200 pips. Okay, now, markets are very deep and very vicious and very erratic. I know people think they're trend trading, but what they're really doing is range trading, because the way to get in the market is to get in. You might think this isn't a downtrend. You know, anybody can draw a trend line. Duh, no shit. Okay, anybody can say we're in a downtrend, but what if you sold here at the bottom? You're expecting more down. It worked here when you sold this bottom. In other words, if you sold here, even though you're kind of getting trapped for a few pips, you look like a genius. It was a downtrend, I sold. Well, how do you know that? Why wouldn't you do the same trade here? It's down. I did the same trade, same pattern. It's down. It's down. It's in a downtrend. Okay, you just got your ass kicked by 300 pips. By the way, the big black line's 100 pips, and these are 20 pips. So how tight is your stop? Now, if you're running 20 pip stops and all that, you can see. Now, another thing you want to do is, so you be aware of, I don't even know how tight a stop you're running, but like I said, you could pick a hard 30 pip stop and make $1 million with a 30 pip stop to make 20, 30 to make 30, 30 to make 40. You just have to place those all on those charts. Figure out how long those orders are going to last. I mean, it's a lot of work placing orders. Okay, you're right. Any fucking idiot can analyze a chart and go, yeah, trend line here, duh. Okay, getting the sizing right, getting the expiration dates right, and if you're going to trade, if you're going to dare to trade at the market like a goober, you really have to trade lightly at the market, because you have so much exposure to your limits pending that you could fill, and those should fill, and those are the better entries. If you fix the scale here, you'll always be able to look at the market as far as, when they talk about depth of market, you have to look at pips. Now, this is the sell-off in 1 day in the dollar yen. This is dollar CAD, sorry. Now, dollar CAD is a very rangy market. It's a true exchange because the United States and America are separated by just a river. And very, very close economic stuff, right? It's just like euro versus pound. Looks the same, just brutal range trading, right? This is not a trend trader's dream. If you think that's trend trading, right? Uptrend, downtrend? Huh? Now here's the thing. What if you, once you see this, you get it, right? You sell here with imagine you're running 80 pip stops on every ticket, 80 to make 90. Sell limit filled. Sell limit filled. Now, maybe you don't want to watch this happen. And this is the daily chart, by the way. You just keep selling into this, dude. I've made so much money on real money without stops trading like this. The account's a stop, by the way, when I trade like that. When I used to trade like that, I used to have 10 to 15 brokers, and I made thousands of dollars trading like Samurai Trader, because I would just say, every 20 pips up, sell, sell. It's a sell high, buy low game. Sell, no stops. The account's a stop. Run out. I add to the account if it starts to run low. Sell, sell. No fill here. Then I wouldn't. As soon as it starts going down, I stop selling. I'm done selling. Now, why would you want to buy here? And I can't see if there's a dead cat bounce in here, because this is the daily. I can't really see if we got a bounce there. But just like the video I talked about, that you was asking about, why buy there? Well, look how good that works out to buy at support. Like I said, if you did not get out here and you run, if you run a trailing stop, you took something off the table, right? You see how you could get screwed here by not getting out in time, and then even if you bought down here, and trading's work, man. There's no way you're going to get around not working. That you're going to quit your day job and you're going to just, I'm just going to trade. Now, structure speaking, which I was talking about there, was here's a closing price. Bottoms become tops. So you'd actually have to keep trading over and over again as you come up into this floor. And it's a broad area. These aren't precise things. The bottom of this wick, this whole thing is a pivot. When it wicks up here on that day, you have a sell limit. If you're a seller, if the market's down here and you're like, the last price pulse is down. So, I mean, there's a lot of, this is probably like 5 up and down trends that create a range. But all you know currently is that we're going down. So you're either going to take a chance and buy here, counter trend trade, but you can see where the sellers are going to cash out, because anybody that bought here thinking this was going to the moon, they got to get out and go flat. Hedge funds would rotate there. Or anybody that wants to get out of the market without a loss. If you're trading without a stop and the market comes back to your, what you perceive to be an entry here where this is going to keep going to the moon, then once it comes back to here, you get out. I mean, that's what I did when I had when I trade without stops. Oh, look at, I'm not in a loss. I was underwater. Now I'm back. Get out. The sellers are going to come in there. Then maybe you started your trade here on a sell limit, and maybe you put your stop here, just above there. And, maybe you have tickets that never filled. You had sell limits up here that never filled. Or maybe you have a stop here and you got sell limits. You're an aggressive trader. I don't know how aggressive you are. If you have sell limits, you just got to place orders, man. You'll make so much money, and you go, this is so stupid. It's a lot of work. Like it's simple, but it's hard. And this is the same thing. This is support, and buy again. But you know what? This is a scary buy, because this is moving down so hard that now you got to think about structures like buyers that come in here. This vacuum could fill next week. It doesn't mean that you can't have a buy limit here with an exit here, exit into the floor. Because if tops become bottoms, your question should be, where do I get out? Not where do I get in? Because once you're in, you got to know where the people are going to get out. The same thing here. If you bought this stop hunt, if you bought this, Like you're clever enough to see this unfair value. By the way, this broker has a Sunday night bar, so this baby bar is Sunday night. But even Monday, we dip back in. You buy. You got to know when it's time to get out of that trade. And it's usually when they're going to come up and you're going to sell it. The most money you're ever going to make trading is to buy here. And when you get to your target, you're going to go the other way. Because 80% of the market's range trading, and that's who makes all the money. You could call this a trend, and you will make money on this move, right? But how long did you wait for this move? How long did you wait for that? What do you do in the meantime? Well, you make a living trading all this bullshit. Stop, hunt, buy, sell high, buy low, sell high, buy low. If you're placing 1Ks at the 20-yard lines with a 50 pip stop to make 90 pips, you make money, right? And you may not get filled on these tickets. How long does a ticket last? Look at some of these moves here. I mean, this is psychotic. The market's seriously dynamic. Here's a top become a bottom in price. Stop, hunt, inverted hammer, bam. But you could trade this and you could scalp this chart, never go to another time frame. The problem I have with empowered trading is they'll look at something like this and go, okay, let's go down to the 4-hour chart. Why? A 4-hour trader's on the 4-hour chart, right? A 4-hour trader's trading on, he can place a buy stop here. He can say, ooh, low risk entries here, or buy at the market with a tight stop. Buy at the market, tight stop. Buy at the market, tight stop. Oof, maybe the trend's over. You could also put on a hedge there. And when you see that, you can't say, well, I'm going to go top bottom theory. This should be a top becomes a bottom. Okay, maybe you get stopped out of there. But when you see a vacuum this big, or this kind of drift move where it took forever to get there, nature don't like a vacuum. You know, just like this big wedge vacuum of price here. When the more market presses down, right, so it's ranging back and forth, cutting through vacuums. Now go to the dollar yen. Now here's a perfect example on the 1-hour chart of that technique of buying, just buying down here. Now granted, if you had too tight a stop on that, yeah. But look at how much money you made. We already knew that if you bought this top, right, this top, why buy there, right? Or just buy in the 20s. Just put a 20 pip grid in. Dude, just people trading those scripts making so much money. You just canvas this whole area. You got a buy limit here, right? It just sounds incredibly stupid, and it is. Buy, no fills. Your exit has to be this floor, right? You have to get out here or even here on something. You can't just say, oh, it's going to engulf and go to the moon. It may, right? Look how the sellers came in here. This bottom became a top right up in there, pressed. It looks like it's pulling back for a rally, but it may just go sideways and choppy. British pounds broadcasting thing. But when you go to the daily chart, that's the 1 hour. Go to the daily, you're like, huh? Well, of course. It looks beautiful in the daily, actually. Now, I could have done the same trade based on the daily prices. And you say, why would you get in there? Well, here's a top. There's support. Sure enough, buyers came in and they stop hunted anybody that has stop here because people are like, dude, this is going up. Well, duh. When it's going down, duh. But this 20 pip grid, how big is each ticket? Where's your stop? Blah, blah, blah. Here's a monster obvious pivot on the daily. There's no secret to this stuff. Takes this out, finds support, goes all the way up here, cuts through, keeps pivoting at the round number. Go figure. I mean, it's just so stupid, man. You just have to put the orders in there. Look at this place to put sell limits in this little vacuum up here. Yeah, you just put them in, dude. You don't know if it's going to work out. That's why you have to do about 80 trades a day if you're a high frequency, if you trade a lot. But here's the daily chart. So what's the trade here next week? Just throw some orders in there for 8, 12 hours. See what happens. You don't have to know where the market's going to make money. That may seem to be the most stupid thing you ever heard in your life, but it's true. You're asking me, in your thing, you're asking me, how do I know? I don't, and I don't have to know. Isn't that beautiful? You're pointing the perfect place with no evidence. I don't need evidence. I don't have to know where the market's going to make money. If I put a bracket, if I put a buy stop and a sell stop in a narrow range and it breaks out, I don't even have to decide direction. Can you believe that? It's true. Now, granted, those setups are on the 4-hour chart. In other words, you have to wait for the market to quiet down on the 4-hour chart. You put a buy stop above and a sell stop below. They last for an hour, 3 hours, whatever. You got to do this on multiple tickets because you got to have a scalp out of the gate. What if they chop you to death? What if they whipsaw you? What if it chatters? Okay. Now, I know it's hard to believe, man, but you really have to think about the fact that, well, what's the trade next week? What's your trade plan next week? I did Bitcoin last night. I described Bitcoin from the back when it first started trading. Let's look at all markets. Gold, how about this one? I traded this and made money. Now, people keep talking about what gold's going to do. I honestly don't give a fuck because guess what? I'm long from here because this is support. Look how it feeds off there. And you got to keep putting the buy limit back in. Buy, sell, buy, sell. Look at this stupidity, man. Gold, every market is the same. Come up here, trap the bulls, smash it back. Come back and retest. I put these lines in last week. This is always going to be. Look at this amazing winning trade here. You buy here, they came back into the floor on close. Look at that. That's your exit. Your exit is as important as your entrance. What else? NASDAQ. That thing's cooked. Here, Australian dollar. So I drew this thing while I was talking yesterday. Yeah, anybody can draw a trend line. But do you have the time to place the order? Here's another retest entry. Now you would say, they just missed my limit. Okay. Guess what? You didn't lose any money. I don't know if that helps.